All right, and welcome back to another episode of Just for Funds here at Nasdaq MarketSite. I'm Allie Hennessy, head of ETF listings here at the Nasdaq. Today we are joined by Scott Kefer, senior portfolio manager at Victory Capital Management. We've already had a very exciting morning here at Nasdaq. Victory Capital rang the bell this morning to celebrate two of their free cash flow ETFs. We have SFLO and VFLO. So Scott, thank you so much for being here.
Thank you, Allie, and thank you, Nasdaq, for hosting us today.
So can you start off telling us just a little bit about Victory Capital and then also the VictoryShares lineup of ETFs?
Absolutely, yes. So Victory Capital is an asset manager. We have about 175 billion in assets under management. We operate as a multi-boutique asset management company where we have 11 independent investment franchises, each with their own brand, their own identity, their own CIO and investment process. And then Victory provides all of the support that goes along with that. So trading, distribution, marketing, trading operations is all handled by Victory so that the investment team can focus on their investment strategies and their clients. Alongside those 11 franchises is our Victory Capital Solutions team, and I'm a portfolio manager on that team. And among other responsibilities, we oversee the ETF platform called VictoryShares, where we both develop and help to launch ETFs on the VictoryShares platform. That platform is now 28 ETFs, close to 10 billion in assets under management. And those 28 ETFs really span from rules-based solutions that track an index to fully active solutions across equities, fixed income, and alternatives.
Yeah, you guys have a fantastic lineup, and like I mentioned, we were here today to celebrate two of your free cash flow ETFs. You guys have seen a lot of strong investor interest in these products recently. What do you think is really driving that, that interest?
Yeah, that's a great question. So I think what's driving it is we go out and speak to advisors and clients. There's a strong demand to diversify portfolios. A lot of portfolios, in particular in the large cap space, have a lot of cap-weighted, Magnificent Seven growth exposure in their portfolios, and they're looking for ways to diversify their portfolios. And value solutions are a great way to accomplish that. Obviously, value investing has had some difficulties in some cases over the years, but we attribute a lot of that to solutions that are really leveraging somewhat outdated or inferior metrics to determine value. So things like price to book that may undervalue a company's intangible assets, their brand, their IP, or even price to earnings, where earnings can be misrepresenting the power of a company because of non-cash expenses, depreciation, amortization. We, on our free cash flow ETFs, leverage, as the name implies, free cash flow yield. And in our research, free cash flow yield has been a highly effective means of providing value exposure and has outperformed strategies that use those other metrics over the long term.
So you hit on this a little bit, but VFLO and SFLO, not the only ETFs out there that focus on free cash flow. So what do you feel like really separates these two products from others, competitors out there?
Yeah, absolutely. So you're right, we're not the only solution out there that leverages free cash flow yield, but what I think differentiates our solution is how we apply that fundamental factor within the indexes that these ETFs track. So when you think about how you calculate free cash flow yield, and when you think about the other components that go into the index methodology, we think that's where the differentiation occurs. So the free cash flow factor is essentially the cash a company has left over after covering all their expenses, their CapEx. A lot of our competitors simply look at a company's trailing free cash flow. And in doing so, you may pay for past performance. Oftentimes, a company's future free cash flow could inflect higher or lower. And we felt it was very important to design a free cash flow product that incorporated both the historic free cash flow generation of a company, as well as the prospective, the future free cash flow of a company. The other thing that we've incorporated into our solution really stems from a pretty famous quote from Warren Buffett. And he said that a lot of investors think about value investing and growth investing in isolation. And as a famous value investor, he said, growth is always a component when we analyze the value of a company. Our free cash flow indexes incorporate that into the solution as well. So once we find companies that have a high free cash flow yield, attractively valued, we look at the growth profiles of that universe of companies and we eliminate the slow growers. And what the two pieces together represent is really a next generation approach of free cash flow investing. One where you're identifying high quality companies, that's the free cash flow that they generate, that they're attractively valued, that's the free cash flow yield. And with the growth filter, you get an attractive growth profile as well. So together, we think that really represents a next generation approach to free cash flow investing.
Yeah, no, there's a lot there, clearly. Let's focus on VFLO for a second. How are you seeing some of your clients implement VFLO in their portfolios?
So as we said at the beginning, a lot of clients are looking for diversification. A lot of clients are looking to enhance their value solutions. I think that's the first and foremost. Again, trying to find ways to diversify away from the Mag 7. It's also an interesting time with value investing because it can also help lower the risk of your portfolio. The beta of the typical value strategy is around 0.7. Growth strategies are about 1.3. So you can also diversify and lower risk as well. And then I would say the other aspect that investors are finding allocations within their portfolio is to enhance their factor or style exposure. So with VFLO, you not only get exposure to value, you get exposure to high quality because of the free cash flow, and you don't sacrifice too much of the growth that can help drive a stock price either because of the growth filter.
So last question that we always like to ask people here at Just for Funds, any fun facts that you can share about VFLO or SFLO?
Yeah, absolutely. So anybody who's followed ETFs for a long time, they know it's not easy to launch an ETF, and it's even more difficult for an ETF to reach scale. VFLO just last week was able to reach over $1 billion in assets under management, and it accomplished that in just 15 months. And there's research out there from Morningstar and Fuse Research that shows that between 2015 and 2020, if you looked at all ETF launches, a third of those ETFs no longer even exist. And 3 years later, only 4%, so 36 months later, only 4% can reach that $1 billion mark. We're extremely pleased, proud to be able to reach that level in just 15 months.
Certainly exciting, definitely a fun fact, and worth celebrating here this morning. So Scott, thank you so much for being here in the studio, and thank you so much for watching.